Good morning, everybody. Long time I've not done a video, so I'm just doing this quick video to explain what I was saying um, in my tweet right now about this level here, which is a 10985. I've been speaking about this since yesterday, and about this trend line, inside trend line broken. So that's where we are now. You see, we tagged to the pip this trend line. We came back a little bit above the other big trend line that we had broken down. We came back a little bit above it just on the first move up, and then inside the ECB yesterday, then went down again. And that's where we are now. I just posted that um, we had a close, a daily close, if we look like this, and that's important because we had a daily close. If we look very slightly, this is the level I've been calling 0.985 more or less, and you see we have been closing under it. Generally, in normal market, that means the trend of that candle is dead. So it means we are reversing. We can go up to this bottom, we can go lower. It doesn't mean we will never go up, of course, but that's what we can read here, and we need to read something, especially in this market, which is not, let's say, very comfortable. So that's what I pointed this morning when I said we slightly close under that. Concerning the rest, if we look at this 1 hour time frame, and yesterday I spoke about this too, if you look at this trend line that we draw here, you see that this morning we can even put it like this. You see that this morning, yesterday we broke this trend line, then inside the Asian session we came back above it again, but since this morning we came back, we touched it here right to the pip, and since then we are down. Plus the fact we are breaking now the daily open, we broke this level that I just mentioned. So as I said, we have an open range of thin market, still more or less this weekly open here. So this is the area where we should land fast this morning. We should come inside this area very, sorry, we should come here quite fast this morning, more or less in the 19, 20, 30 up to, because I have something at 30 here. So that's where we should dip fast. We can see the acceleration now. I don't know yet. So if we look at that on the bigger time frame, and that's what I wanted to show you here, this is what I use. It's one of my charts. I have a lot of EURUSD chart because I'm trading it 100%. So what is interesting here, let me put that correctly. No, it was correct. Sorry, not the right time frame. That's all. Okay, so now I will block it. So what is interesting in this chart is first of all, you see we stopped to the peak on this trend line I have here, and we had some big volume support there, very, very big volume support at this level, which is why we have this consolidation there, and that's why we have this gap too is the one that created this consolidation, but this gap came because of this volume we have behind that. So first, this trend line, trading trend line is not easy or not so simple as it could look like, because we have always a lot of way to draw the trend line. We can use all the spikes, you can use small time frame, bigger time frame, but if we use the top of the, that's something I'm teaching when I do the mentoring, but if we use always the top of the candle, I mean the open, not the open or the close, the high or the lows, you have some trend line. But sometimes when you use, and that's what I did here on this blue trend line, if you look at this blue trend line, which is looking a little bit weird, this blue trend line, I will take off this thing here, this blue trend line is a monthly volume, what I call monthly volume trend line. So why volume? Because it's based on the monthly bodies. And the body of the candle is where we have volume. The spikes is nothing. So in those very hard markets, it's important to stay in the volume side, because that's where we can see reaction. Spikes is just some excess of moves, some crazy moves. So if we look at this trend line from 2014 to 2018, you see that it comes to right the peak on this confluence of two trend lines here, which is mostly where we stop. But if we go really deeper inside, you see that the one that did the job is the pink one, and on a smaller time frame, it's even much more precise. So the other thing we have on this chart is this black trend line. I have drawn since a long time, and I've been using it for trading since a long time. So this black trend line here, it's not well done because we are on a smaller time frame. But if we take the daily, well, it moved. So if we take the daily and we put it correctly here, it moved because I didn't lock it. Okay. So if you take this trend line here, you go from this top there, and look, you go from this top here, okay, and you take this bottom here, you see we came a third time, then we came once, we bounce again, and that's where we pierced this trend line. Why do I keep it? Because this one is giving some hard work on the way back, and will give a hard work when we will bounce hardly the day this war will be under control and over. So that's why I keep it. On the bounce from this pink trend line, we came back right to this bottom, to the peep here. You can see it very, very well there. And now we are back under it and under this 50D MRC level, which is what I have here. So now you see, I have a lot of Euro chart. I'm not using all of them, of course. Most of them are just study. This is my EMA MA chart, so where I have my 2021 EMA and the 200 MA, and of course the daily, weekly open. So here, what we see, if we look at that, we have we try just to take some distance with that from the EMA point of view. The 1 hour, 4 hour, daily, and weekly. Here they are, and they will give some work whenever the price will come in this area in confluence with other things when we will come there. Then we have the 1 hour and 4 hour 200 MA, and then up there a lot more. So let's have a very quick look at that on the longer time frame. So if we look on those big time frame, we put on the daily chart, what we see we have here in between the important EMA, let's say this one is the weekly, if I'm not wrong. Yes, it's the weekly. So this one is the weekly. We have the daily just coming under it. So you see the momentum here. The momentum for now is big, but due to the fact that we are in this war situation, it can mean nothing. I mean, the price, when it will decide to go up, and when the war will allow it to go up, it will go very fast and very strongly. But for now, that's where we are. And we have to manage intraday trade with those two things. So you see how the 1 hour and the 4 hour has been shrinking, the space between them has been shrinking, which was telling us the momentum on the upside, the short time momentum on the upside was dying slowly. And that's what we have seen since then. So now I am looking at this level here, this level there, and of course I have here all the fib charts that I have posted. You remember this one where yesterday I took a long, I was long here, did like 30 pips, then took a short here, a short here right now again when it came back there. No, I was short first and then took the long. Anyway, it doesn't mind. So that's where we are now. So this is the fib chart. So what do we see here? We have some important fib. You see those inside fib here. That's something I'm using. I find out and I discover, and that is working quite nicely. And that I teach too when people want to know how it works. So this is inside fib of other things. But what we see here, you see how well this 38.2 has been working in many, many occasions. So it's important, it's validating the fib itself. Now we will see, and you can see it very soon, 109.68.5 will give some support here. It's the 2360 of this inside move. So we will see some support in this area, but we are in the thin market till we arrive to the 130 area here. Here you remember we have the yearly S1 pivot and the yearly S2 fib pivot. So we have those pivot area together with the weekly. So when with the weekly open. So when we would arrive there, for sure we will see a reaction. And then we go lower. You have here the 2140 fib. Here you have the 1140 together with some trend line that we broke and everything. The big trend line has already shown. And then you have the other series of fib. You see how they have been working. The 1.272 here that has been holding the price in many occasions. And at this bottom here, where we touch the pink trend line I showed on the other chart, you have the 78.6 fib. This one is very important, and I will show you why. If we look on this big time frame, the one I just mentioned, this black one here, the 78.86 fib where we landed and where we bounced from it, is the retracement of that move up. And you see that in the future it has been holding. Of course, when it's an old fib like this, because this one is starting in 2017, it's not very old, but it's older than the most recent one, of course. So when it's an older fib, we see a reaction that is not really always to the fib, but it gives an area where we would see a reaction. And then if we want to go a little bit deeper inside this reaction, and if we want to have something more precise in this reaction, you take, for example, this red fib here, and this red fib is measuring this retracement, only the last move, I would say, the last move on the upside. And what you see here is, I will try to make it clear, but you see we stopped there. Here we had the 80.86 fib of this move up that was creating a confluence together with the 78.6 fib of the big move that we measured. And all that, it's a little bit complicated sometimes. All that is inside that ABC down where we have been. So if we look at this ABC down, the purple one here, let me put it a little bit bigger. Okay, like that we can see it, and I will take off the this fib here. Well, you can see it like this, or I can copy it and go to the clean chart there and paste it. So if you look at this ABC that I'm mentioning, you see it's cleaner like this. If you look at this ABC, you see too, we had the 78.6 of this ABC down there. And we had the 78.6 of the black one I mentioned, and the 80.86 of the red one I just mentioned. I hope that's clear. And of course, the trend line, that was all that was giving us a big, nice confluence together with a big volume support we have right in this area. So now let's go back to this ABC down. So this is an ABC. We measure it here, ABC. So first, is this one valid? When I look at it, and since it's created, you see that we came through this 236, and the 236 is the one that is validating this ABC. And you see the price came back once, twice, and boom, went down from there. So that's very good, because that is what, for me, is important to validate that ABC down. And ABCs are very important in my Fibonacci tools strategy. Then you see here the 38.2. Let me put it under the line. It will be easier. So you see here the 38.2. We went through it. We should have bounced from it, but we didn't, telling us the momentum was strong. So we went through it. We came back a little bit above it, but see how many times, that's a daily chart, how many times we came on it. Then we went through the 50%, which is generally not holding very well, and we came back around the 61.8, stopped on the trend line I showed you before. Then come up to this 50%, you see how it has been holding in many occasions, and then below the 61.8 and went to this 76.40, 78.6. fib. Why do I show you this? Because the next step is 104.350. That's what we would have as the next step if or when we would draw this trend line. Some traders that are trading Euro USD like me have been asking, when do I think this Euro USD will stop? It will stop when the war will be over. That's very simple. But for now, we have no idea. So we have to be very careful where this thing can go, because it could very well drop now to this point if, as I think, we'll get a very bad start of war around the Kiev area and the Odessa area in Ukraine. So we can get this thing very, very badly in this area. And what you see here, which is very interesting, you see this one-to-one extension is coming more or less in this support area. And if we take, I'm pretty sure you will find it. Look, if we take this, for example, you can take this on a weekly chart. You put a line here. I've not prepared that. I hope it will not make me lie today. You can put a line here in this area on this double bottom, for example, bodies again, because that's volume. And in the moment we are looking at, we need to know when the reaction is likely to happen. And generally it's on volumes. So look, right to the peak. So that's where we have this one-to-one extension. So this area for sure, if we would drop on it, under it, and I think that's likely now, because what will happen in the next day will be much more stronger than what we have seen till now. At the beginning, the war was a surprise, so market overreacted. But when it will really start to be, sorry to say that, but a very harder war than it is now, market will sell off much more the euro, because of course we are in the eurozone. Remembering that USD is safe even in those cases, but there is absolutely no reason for the USD to be so overbought from the fundamental point of view. So which means when that will be slowing down from the war point of view, or when that will be ending, we will see a very aggressive move on the way back, but really very aggressive, because this thing has no reason to be buy like this. Just the fact that people are risk off now. So of course, if we break this one, then this ABC down is no more, is still valid. And if we would break more, then we would go to 1099.98. So that's why I wanted to show you this thing on the clean map, so you can on the clean chart, sorry, so you can understand why it's important to have several things. And that's what I'm doing with my work on the Euro USD. I'm using all my chart. I have some very important one, this one with the EMA, this one with the trend line, this one with the fib, which is looking like a crazy thing here. But when you know this one is the biggest time frame, this one is the smaller, and that is the ABC, and you go inside here and you see we had this thread here that was the 88.6, you had the 76.40, and we had the 76.40 and 78.6 of this ABC down, and we have the target for lower move in case, not in case, unfortunately, because I think really this war is not over, but when this move will be over. So this war will be over. So that's why this 8086 here, I come back to this, is important. And those 276.40 and 78.6 fib are important too, because they can give some reaction there, okay? So, and of course here, this ABC fib, you remember the ABC down, which is looking at the end at this 104 and the one-to-one extension at the 99 area. So intraday, we come back to there now. We'll just go back. So we see while I was speaking this morning, we were went down a little bit here, then we are coming back there. There is no reason, unless the ECB will make a special announcement today, but Lagarde was really not looking comfortable yesterday. And the reason is very simple. She has a pressure from Germany to hike, and she has a pressure on the other side from Spain, Greece, Italy, and France not to do it because they have a much bigger debt and they don't want to hike rates now. But they will do it. They have no other option to do it to combat, to fight the inflation. So they will hike, and when they will hike, this thing will fly and then will come back lower till the war is on. So intraday, as I said, we have this level here, we have that one there, we have the weekly open to come here, and that's what should give us some good place to do it. Of course, when we trade this thing, and I will show you that here, I always trade it together with my series of Dixie chart. And I have the same thing on the Dixie chart. And you see why the price is bouncing now on the EURUSD. We have this big yearly support here. And that's exactly when the price came to this 23.65. So it was a confluence. I could have gone a little bit long here to get some long scalp. I didn't because I was speaking with you and I cannot do everything in the same time. But this one will offer some support, some resistance, sorry. And then we have this little one there, but not so little because we have seen it has been working in the past in several occasions. So it's exactly the same on this side. I have my charts and I have my, I'm going to take this off, and I have the level that allows to know when I am hunting. It's very simple at the end. I am hunting a confluence of level on the instrument itself together with the Dixie, and that's when we can make sure to have more chance on our side to make money. So I will try to do a little bit more updates in the next days if I have time for that, and I will post them on Twitter, of course. Have a nice day.